All right. Good morning, everyone. My name is Dave Scott. I'm the marketing manager here at 10X. And today we're going to be talking about the biggest reason why growth strategies fail and how to overcome them. And today I have the honor of having our president CEO, Jeff Carbeck, with us. Jeff is a long standing career in academia as well as with Deloitte, and he'll be talking about his journey, not only from his past experiences, but what that means for 10X and what that means for you all, especially as we talk about growth strategies. So a few parking lot items before we get started today. First, if you can see the webinar and if you can hear us okay, and if the audio levels are good on your end, just shoot us a quick comment in the chat box. That should come up as you see the webinar progress. This webinar will be recorded and we will be posting it to all of our social media channels as well as our YouTube page. So if you have a colleague or somebody that you know that wanted to hop on this webinar or see this webinar and they couldn't make it today, it will be recorded and we'll be sending out that link afterwards. If there's any questions, we will have a short Q&A at the very end of the webinar. So feel free to go ahead and just shoot us those questions in the chat box. I'll be monitoring those as Jeff goes over the 3 types of growth strategies today. And we will certainly try to get to those at the very end of the webinar. And again, if you have questions and they don't happen to get answered today, just shoot us an email. Our email address is clients@10x.com. So clients at 10eqs.com, and we will try to answer those via email if for some reason we don't get to them today. So it looks like Stephen replied and said, sounds good, looks good. So Jeff, I think we are ready to rock and roll, sir. So I will give it over to you to talk to us today a little bit about why growth strategies fail and how to overcome them.
That's great. Thanks very much, Dave, for that intro, and delighted to be here today and to talk about some of our perspectives on growth. I'm sharing my screen right now. So what I'd like to do is, before we talk specifically about some of those challenges, is just talk a little bit more broadly about 10X and how we think about growth in general and how we approach the question of how you gain insights for growth, because that's really a key part of what we do is provide the outside in view that we think is particularly critical when evaluating growth strategies. And it's one of the things that when we talk about reasons why growth strategies fail, it's often because there's not sufficient external perspective on the opportunity at hand. And this comes from experience from myself, both in building and starting companies. So it's just a bit of a background on me. I spent about 8 years building and starting small companies with the intention of growing them into large companies, based on the idea that we really wanted to accelerate commercialization of new technologies. But it's fundamentally a growth offering, or a growth opportunity and challenge. And one of the big things we learned through that process was not getting early enough on outside in views on your growth opportunity and strategy, and kind of keeping that opportunity held closely in your arms for too long a period of time. And so one of the reasons why these strategies fail is because it's often difficult to go out and get that insight, to get that voice of the customer input, or to better understand the market players and what drives their decision-making process. And so that's one of the main reasons why we wanted to put this session together, is to talk about how do you get that outside-in perspective for different types of growth strategies, and to talk a little bit about how we specifically at 10X do that. So, we've already covered my background. I'm the CEO of 10X. Before I joined 10X, I was with Deloitte Consulting, where I built and led their global advanced materials and manufacturing practice. So there we were focused very specifically in the manufacturing sector around driving growth, but a lot of the challenges and the issues that we saw there, and the inputs that were required cross over into different industries and are very relevant, I think, to what we'll be talking about today. One of the things we learned through that time at Deloitte was that what many of our clients were looking for was not so much a generic strategy framework that we could provide in a pretty straightforward way, but rather much more voice of the customer, voice of the market input directly into their growth strategies. And that's one of the reasons why I actually joined 10X from Deloitte, because clearly 10X has an operating model much more aligned with gaining that outside-in perspective that we think is so critical. So what I'd like to do is just very quickly go through a few slides related to 10X and how we are positioning ourselves and the gap that we see that we fill in the market. And then we'll talk a little bit about 3 different growth strategies and some of the challenges associated with them, getting to the topic of why oftentimes these growth initiatives fail. And we don't want to focus on the negative of why they fail, but what we'd actually like to talk more about is some of the things you can do to avoid those common failure mechanisms. So 10X is built around the idea that we can take traditional insights generation, a lot of it done through either internal strategy development or through external consultants who help in strategy development, and break that process down into a set of steps that can be done much more quickly and efficiently, while still maintaining all of the quality you would get from a normal or a traditional process. And so that's really where the name of the company comes from. 10X, 10 EQS, so 10 times the efficiency, quality, and speed of traditional approaches to gaining insights relevant to things like growth and improved performance. And one thing I would say about where we started from, it's really about the idea of re-engineering that whole insight generation process, taking out the inefficiencies so that we get directly to the topics and the questions of interest. And part of that is taking on topics and questions in a more compartmentalized way, or in a more modular way, so that we can gain insights, take some action, gain additional insights, take actions, and so forth. So it's a more iterative and engaged process than traditionally available. When we think about what we do in the context of the overall ecosystem, where 10X really is, it sits between traditional management consulting here on the right side and expert networks. And what we found is there's really a gap there in terms of the insights that an organization needs to really start to do corporate development, particularly around growth, but also around performance improvement. And that you can engage expert networks fairly easily, learn some gain some initial insights, do some initial understanding. But then to get to an implementable and an operable model, there's still a large gap, and there may be a significant number of things that you'd like to understand, and even some decisions you'd like to make before you engage with more traditional management consulting that are pushing more into the implement and the run and transform part of the process. And so this is really where 10X sits. So in many ways, we draw on the best of these two worlds. So we draw on expert networks. We have our own proprietary networks that we interact with, but we also interact with other more traditional or well-established types of networks to bring those expert insights in. But we really do it within the context of a more traditional consulting framework, where we're driving towards specific recommendations, insights, and conclusions that can ultimately be part of an implementation and run process. So we recognize that the insights that are gained through our process really need to be very much targeted towards moving down the right-hand side of this process of using market intelligence to build new opportunities. So this is how we position ourselves, and this is often where we get engaged with clients. They've done some initial learnings, but before they commit to a very significant engagement with a large professional service firm or internally, they work with us. And that intermediate process, like I said, is often quite iterative. The way we do this is really by doing two things. So one is that we staff top tier consultants on our teams. We use freelance consultants who have the right experience, both in terms of industry and geography, but also with providing these kinds of services through other experiences. And then we surround them with industry experts. And so the net effect of that is, even though we do a relatively short project, our project's maybe 3 or 4 weeks total in duration, we might engage 20 or 30 individuals in generating the insights of that project. And we think that's what's really unique. It's about not just getting to insights quickly, but getting to insights through the perspective of a large number of industry experts who are actually working in that space and can actually give us insights into the market dynamics and the decision-making that's happening in that process. So when we boil that down to the solutions that we offer, really there are 6 things that we do that are relevant to the growth initiatives, and they're shown here. And although they look like what you might expect or what you would see in a fairly standardized way from a lot of different organizations, what we think is unique about our approach is that in each case, the insights and the assessments that are developed really come primarily from primary research. So talking directly to people who are either technical knowledge leaders or industry knowledge leaders and engaged directly in that industry process. Whether we're looking at assessing a market or whether we're identifying a partner or doing an innovation scan, that external perspective is the key thing that differentiates us in the way in which we get those insights quickly so that they can then be actionable. We also work across industries. So many of these approaches are very flexible and can be applied to a whole range of different industries. Obviously, the specific questions we're asking and the specific people we're talking to vary, but the overall scale and dimension of the kinds of insights that are going to be required to achieve the outcomes from the solutions I showed on the previous slide are similar, and therefore can be used across industries. And one of the things we've done intentionally at 10X is not try and build industry expertise or capabilities, but rather build our expertise and capabilities around the solutions, and then recognize that the best way to gain insights from an industry is to go out and get somebody that's actively engaged in that industry to participate in the project, versus us to take somebody who's quote unquote an automotive sector leader or a consumer goods and retail sector leader, and have them be the primary provider of the industry insights. We get that directly from people in that space, and we think that's a big and important differentiation, particularly when you're looking at growth strategies where you need a very detailed understanding of what's happening in the market today. So it's not enough to have participated in the market 3 years ago or 5 years ago, or have done projects for clients in that market. It's about actually talking to people who are in the specific market of that sector and are dealing with a lot of the issues that our clients are dealing with as they launch their growth initiatives. Just very quickly, it's a very straightforward process. We work to do scope definition within 24 hours. We can go from discussing the broad scope to having a proposal within 24 to up to 48 hours. We put together an initial team as part of that process, so that you can take a look at the team and decide whether they're going to be the right kinds of backgrounds, and we'll evolve that before we even start the project. And then we execute and deliver. And like I said, often these projects take from the very beginning of scope definition all the way through project delivery 3 to 4 weeks. And we think that's a really important time scale, because your decisions about growth opportunities are very dynamic. And oftentimes you're not looking at one opportunity, but you're looking at a whole portfolio, and you need to be very efficient about assessing that. We've worked with a large number of clients across a whole range of different industries, as I've mentioned. This just gives you a sampling. We've got great feedback from our clients. This is all on our website. You can go and read some of the feedback that we have. What I'd really like to do, though, is get into now a discussion of growth strategies, some basic mechanisms or modes by which we see failure occurring, and specific steps that we think we can help clients take to avoid that. So I'll use this slide here to cover that topic in some detail. I think that really the best place to start here is to talk about the fact that there are fundamentally different types of growth. And oftentimes growth and innovation get lumped together. And we think that you have to be careful. A lot of times when people talk about innovation as a growth strategy, what they're really talking about is the far right here, we call transformational growth. So this would be going and offering a new product or service to essentially a new market. So it's the new. It's the landscape of many startups and also many large organizations build initiatives in this space as well. It's an absolutely rich place for development of growth. However, it's characterized by what we would call high risk, high reward opportunities. And the challenge in working in that domain, in the transformational growth domain, is really about deciding how to distribute resources against oftentimes many divergent opportunities. There's usually not a lot of overlap amongst them. And so each one needs its own sort of insights and team and so forth. But before we get to that in greater detail, let me start with where we think most of growth, where we understand where most of growth happens, and where we think many organizations actually lose a key opportunity to accelerate and build that growth platform, and that's around core growth. So core growth is really focused on gaining market share where you have an existing product or service, and what you'd like to do is grow the market share that you have, but also in principle grow the profitability of that market share. So when we talk about growth, typically we're talking about revenue growth, but we can also use many of the same approaches to grow the profitability of that segment as well. So in core growth, what we're really talking about, like I said, is how do we gain more value out of our existing products and services in the markets that they're in today. And really, there are three things to do here. So one is to better understand the positioning of your product in the market. So doing a competitive analysis and assessment of where your product sits in terms of both its performance as well as its price, and maybe even not just price, but pricing model. So for example, more and more services are being offered on a subscription basis, for example, versus a flat fee basis. But understanding that positioning is sort of the key first step. And that really is part of the overall competitive landscape to understand the other players in that space. But we think the most important piece of that is actually not just understanding the competitors, but understanding the customers and doing customer segmentation, and in particular, understanding their buying behavior. So if you're in the consumer product space, this would be done through conjoint analysis of surveys of many thousands of customers often. In the B2B space, that's just simply not doable for the most part because the number of customers oftentimes is small and quite divergent. And so this customer segmentation and understanding their buying behavior is really a key area that we focus on. And it's really about understanding the correct segmentation of the customers. It's not just about size and geography, for example, but really segmenting it in such a way that we can cluster customers based on their buying behavior. So for example, in the commodity space of chemicals, you may find that there are some customers, all they care about is price. And all they want to do is buy certain chemicals and materials that go into the manufacturing process. They don't need any support. They don't need technical support. They don't need technical assistance. They just want to buy at the lowest price and usually in volume. And so the pricing strategy for those customers is going to be quite different than, say, a boutique formulator that's buying that same chemical, but they want to use it in very specific applications. Maybe it's high-end automotive finishing. And for each application, they need a lot of support around development of the final the final formulation and application, in which case they might be willing to pay a much higher premium for access to technical assistance and engineering. So if you only have a single pricing strategy, you're probably not gaining the right volumes from your first customer, and you're probably not addressing the true needs of your second customer, and probably pricing too low for the second customer. So that understanding of customer segmentation and buying behavior is really key, and that can only be obtained by going out and talking to customers. That can be a difficult thing for an organization to do directly. Oftentimes their customers may not want to talk about exactly how and why they use the product that they're buying. And so one of the things we do at 10X is do those sort of assessments and analysis in a double-blinded fashion. So we get to talk directly to customers without it being revealed who the client is. And we feel that we get the much better insights and much more forthcoming perspective based on that approach. So really core growth, the challenge there, or where we see the biggest failure mechanism there is not going out and actually getting direct voice of customer input, particularly in a B2B setting. And this customer segmentation and buying behavior analysis is really a key solution to addressing that. And that's one of the things that we find is particularly valuable to our clients who are working in that space. It often touches on profitability as well, like I said, because pricing strategy can oftentimes present opportunities to adjust pricing or adjust the way in which you charge for your product or service in such a way that you can either improve cash flow or improve profitability as well. So it's not just about growing market share, but it's also about positioning your offering in such a way that you get the best margin out of it, depending on what the customer demands and buying behavior are. So let me switch now to adjacent growth. Adjacent growth is probably one of the biggest opportunities for driving growth. One of the challenges with core growth is oftentimes the market is, well, certainly the market is finite, and to grow in the core growth approach, you really have to be taking business away from another competitor. And in some ways that's the hardest thing to do, although it's also perhaps the biggest return because of the current presence in that market already. With adjacent growth here, what it's really about is taking your product or offering and going into a new market. So a market you're not in right now, but a market that's adjacent to one you're in, where your product or service can have impact, or it's being in a market where you've already serviced that market and understand its needs very well, and you want to add additional products or offerings, service offerings to address unmet needs in that market, where your channel to that market and your knowledge of that market is already well established. So for example, we see, again, just using an example from the chemical space, the material space, companies that are selling materials into the automotive market oftentimes will do acquisitions of smaller players to build their portfolio of materials that they can offer into that automotive space, because they've already got channel access. They understand how that market works, what the dynamics of it are, oftentimes what the buying behaviors of their customers are, if they've done a good job around their core growth strategy. And now they want to just create additional offerings. The other side of the coin would be a company that has a product or service that's well suited for the automotive space, but they want to now carry it into other industrial products. So maybe they have a high precision injection moldable material that's right now being used in automotive, but could be used in other industrial settings, and they want to move into that market. So here, the fundamental new piece of information that's required to be successful is either an understanding of the new market that you're trying to enter with your existing product or service, or the new product or service you're hoping to introduce into the market to which you already know. And so it's really that evaluation of need within the market and whether the offering that you provide is going to be a good fit there. One of the biggest failure modes we see in adjacent growth is around what we call confirmation bias. So this is when you have a product or service offering and you're in a certain industry, and you say, hey, this might also have value in an adjacent industry. And you go talk to people in that industry and you say, do you think that what we would do would also have value to what to what you have or need in your space? And the answer is yes. And then you check the box and you say, great, let's go after that new opportunity, versus asking, what are all the things that need to be true, or what are all the things that we believe to be true for this to be a good opportunity. And oftentimes it's not just about the need, it's about how you enter that space. So for example, who would you need to partner with? Who would you need to incentivize to change their behavior? Other questions around things like supply chain and distribution. How would you actually tactically get into that market? There's a whole range of questions that we need to address essentially as a set of hypotheses about the opportunity. So with adjacent growth, we create what we call opportunity hypotheses. They're a series of things that we believe must be true for the opportunity for an adjacent growth strategy to be attractive. And then rather than going out and just confirming that area is attractive, we actually test those specific questions, some of which can be quite detailed. And so again, getting the insights and testing the opportunity hypotheses is very much an outside-in perspective that again comes through this approach that we use at 10X of custom recruited teams and using industry experts. This is often a time where we also see benchmarking and best practices come in and play a key role as you're thinking about setting up a new business or a new offering, understanding how it's done today, and what are some of the best practices, whether it's around pricing or how a supply chain is set up, or even how sales and marketing are done. Those benchmarking best practices assessments can be really key in this space. The third thing I'll talk about then is transformational growth. We've talked a little bit about this already. It's in many ways the most exciting part of growth, because oftentimes it's big new opportunities, so very clever solutions to what are perceived as big problems in the market or big opportunities in the market. Really, the challenge here with transformational growth that we've seen is that most organizations have a long list of transformational growth opportunities. So the challenge is not coming up with ideas around where they should go from a transformational growth perspective, but rather what are the few that are deserving of real investment. So again, here the idea is about how do you quickly gain insights on the few key questions or issues that are relevant to making a choice about a transformational growth opportunity. Right? You can't justify the investment in a full business case for all the different transformational growth opportunities that an organization generally develops. But at the same time, you need to develop a process and a discipline for making decisions about what you prioritize and what you deprioritize, and why, and what are triggers, and manage that as a portfolio. And in fact, the whole growth platform, everything from core to adjacent to transformational growth, it should be really managed as a single portfolio. And I'll come back to that point in a minute. But specifically talking about transformational growth, this is where you're going to have your largest portfolio of opportunities. These are going to be the ones that are least well understood. These are going to be the ones that have both the greatest potential reward often, but also the greatest risk, because there's a substantial number of uncertainties. And this is where you really need a flexible, dynamic assessment process where, like our opportunity assessment for adjacent growth, in even a more streamlined way, you may only want to ask and get answers or insights into one or two key questions at any given time about a particular transformational growth opportunity. And so again, this is where we think our approach has a particularly unique value. We can really scale the scope and the topics around which we need to gain insights very easily. So for a core growth initiative, we may need to do a very large set of interviews with a number of different industry experts in a different range, different sets of different positions within the value chain to get a better understanding of our core growth. With adjacent growth, maybe it's a smaller number, but more targeted around a new market in a particular geography. In transformational growth, oftentimes it may be initially even just talking to 2 or 3 or 5 experts in a particular area to get at some very specific questions that help us to decide whether something is really worth an initial investment or additional investment in or not. So being able to scale the type of engagement is really important. With transformational growth, like I said, the primary mode of failure we see here, it's really twofold. So one is having too many opportunities, and adjacent or associated with that is not having a discipline or the disciplined process of prioritization and investment in the few that matter. And so you see a lot of churn and activity and transformational growth opportunities without a lot of not necessarily making a lot of hard decisions about what are the few things to really push forward, and how do you then flag the others for advancement if things change in the market. So those are the three different areas. We've talked a little bit about some of the services that 10X brings for those. We've also talked about some of the failure modes for each of them and how to overcome them. I think the last thing that I would say on this topic before we open it to questions is that in the end, all of these matter to most organizations, and to really continue to thrive and grow in the market, you have to have a portfolio of growth initiatives spread across these, and getting the exact right balance between core, adjacent, and transformational growth will vary not only by organization, but by even with businesses or product offerings within businesses. And so that's one of the things that we help our clients understand is kind of what their portfolio should be. And again, this is where some of the benchmarking and best practices come in, because it varies by industry, before they then start to make decisions about where they want to make investments in these particular types of growth, which at that point triggers additional engagement with some of the specific solutions that I talked about earlier. So I'd like to tie off this presentation on this topic here now, and hopefully give us some time for questions and discussion.
Oh, great job, Jeff. Really appreciate all the insight. Everything looked great. If anybody has any questions, we'll just give you about 30 seconds to 60 seconds to submit them in the chat box. And like I said earlier before the presentation started, if we can't get to them today, or if you think of any afterwards, just go ahead and email us at clients@10x.com, and we'll certainly answer them as quickly as we can. So we'll give everybody about 30 to 60 seconds to enter in any of those questions, and then we'll go from there. Jeff, where is a place where people can get a hold of you? Oh, there we go. There's your contact info. So if anybody does need to get a hold of Jeff before, or excuse me, not before, but after the presentation is done today, you have Jeff's contact information right at your fingertips. So we'll give everybody just a few more seconds to enter any questions. Sometimes there's a lot, sometimes there's not very many at all. All right. Well, Jeff, it doesn't look like there's any streaming in now, but we will make sure we monitor that email inbox. So if anybody emails us afterwards, we'll be available. We'll wrap up the presentation today. Again, if you're watching this presentation and for some reason you had a colleague or a friend or a coworker who really wanted to be on this, but for some reason could not, this will be recorded afterwards, and we'll be posting it not only to our YouTube channel, but to all of our social media pages as well. You can find us on Facebook and LinkedIn. Just go to those different platforms and search for 10X in the search bar, and you'll be able to find us. Jeff, this has been a wonderful use of my time. Thank you so much for the insight, and we look forward to the next webinar next month.
Thanks, Dave. My pleasure.
All right, we'll talk to everybody soon. Have a great rest of the day.